And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. I'm your host, Dimitri. Sorry, I'm quickly clicking on a few things here. I'm going to start sharing my screen here. Today's topic will be about the current state of the market. Now, as you guys have seen, I'm highlighting an issue where it concerns liquidity during this bear or crab market. I'm going to start sharing my screen. Let's begin with a small technical analysis of current market. There we go. I see me a little bit weird. There we go. So as you guys can tell, I'm going to refresh the page. 7-day average market is still in red, with few exceptions like here Tron. However, they are having same issue right now as others in the market. There was a little bit of an uptick you might see here. Let's zoom in on Bitcoin for that. There we go, no analysis. So we are still in an uptrend in the last 24 hours. However, there seems to have been a little sell-off as we breached the 20k level. So it seems 20k 24-hour trading range seems to be the resistance level. Let's zoom out 7 days, and here the same thing reappears. Trading around 20k, sell off, sideways, we go above, immediate sell off, above it, sell off. So 20k seems to be resistance levels. Now we are slightly above it. In reality, it's going to be 20,400 approximately. Yeah, $20,400 current resistance level. Let's zoom out on 14 days, and you can tell same thing here. However, as you guys have seen in the last couple of episodes of Blockchain Talks, there are problems with liquidity due to the prolonged bear market. Well, prolonged due to the bear market and the crabbish market, sideways trading market, which instigated a little crash. So further out, 30 months. As you guys can tell, that's what I mean here. Crabbish movements. We are in a sideways trading market. There's no real up or down. We are going sideways, nicely trading around 20k levels, sometimes slightly higher, sometimes we go underneath it. And that's actually what we are seeing here. So keep in mind, 20k is current levels. Trading range, I might say between, what is this one, lowest point, say at around 18k up until slightly above 20k. So just say between 18 and 20k, that's our trading level. What you're seeing here approximately is good DCA. Apart from that, what is moving inside the market? Well, I'm going to address a little theme that I mentioned in the previous episode. It comes down to liquidity in DeFi and a variety of exchanges. I made a dedicated tweet on the 13th of June, so almost a month ago. And back then I was focusing on Celsius Network, and we were still reeling in from the Terra Luna Bitcoin dump. As you know, Terra Luna in May, beginning of May, had problems with a DPEG of their stablecoin, and as a result, was it algorithmically, was it due to human influence? Probably a factor of both, though I think it was more of their algorithm effing up. By reason I know from the community, it wasn't all that decently programmed. They dumped Bitcoin on the market, which instigated a tremendous sell-off, which you actually can see here, 90 days. So it occurred right here, sell-off, sideways, and then liquidity problems became more apparent. Bam! Fell down once again. Now we're trading at lower ranges. So this trade has been made. Now the most important part here is this. Sad part is DeFi platforms and their native tokens rely on market success, on how the held coins are performing and how intensively people are trading. Current market conditions, quite badly. Why do I mention this? Well, current market conditions, we are in a sideways trading market. We are in what people call a bear market. And it is actually quite clear if you see in the last 3 months. Even if you start zooming out, well, this was still high volatility sideways trading, but we are in a bear market ever since November 2021. Despite me saying, yeah, we might see some recovery back then, naturally, everyone makes mistakes. I'm owning up to them. But since then, we are in a heavy consolidation phase, heavy correction phase. Might have bottomed out currently, but as you can tell, we are in a bear market. And during bear markets, well, there isn't real money to be made. The assets you're holding that you've bought earlier, well, are losing in value. Meaning, in order, if you have a stable coin, for example, in order to retain a stable value, you will need to be buying in additional assets in order to not have a DPEG. That's the kind of things, well, the thing that actually caused the collapse of Terra Luna. And it's also something which is plaguing all stable coins. As you can tell, I'm going to zoom out here and simply show you how Tether, for example, is doing. And you can immediately tell here there's a tremendous amount of volatility going on here. It's not a real DPEG. We're still at around $1 USD, but it is going high wire. It is going crazy. By reason, they need to buy up additional assets in order to remain pegged. And a lot of stablecoins are having trouble, as you guys can tell. While the differences are relatively low, few cents, it goes to show that we are in a bear market. So now to 90 days, you guys can tell. There we go. There we go. Even a very deep one dive here. 1 year. So it really has to do all. And you guys can even tell here, November, we were in a bull market up until then, all-time high. You can see at average, it was trading above those levels. Above its, at average, it's $1 peg. By reason, the assets they hold or held were increasing in value. And it's actually quite easy to remain pegged that way or create additional value. Things started to go downwards in December. You guys can tell there's a little shift here, I believe, if I put it algorithmically. Nah. Put it this way. There we go. Heavy sell-offs, sell-offs, depegging, correction, and you guys can tell this is typical for a bear market. There isn't so much corrections on its value. As a matter of fact, green, buy up, meaning they had to buy additional Bitcoin, buy additional assets in order to remain pegged. And this is the kind of graph you will see everywhere where it concerns stablecoins. Now, naturally, there's also the case of DeFi platforms. You guys might be wondering, what has DeFi have to do with this? What do even central exchanges have to do with this? Close it down, that's for later on. Where I'm going with this, with DeFi platforms and exchanges, all comes down to liquidity. During bear markets, people want to sell. They want to make profits still, or want to cut their losses. They can't handle seeing the value of their assets going down. And I make a very nice distinction in that, where I want to say is, as long as you keep your assets, despite its falling value, you still have it in your wallet. Sure, its value is going down, but you haven't really made a loss. You still have the asset in your hands. And during bear markets, the biggest mistake everyone makes is starting to dump their assets by reason they're seeing, oh, look, in realized value, we're down. It's going down. Yeah, but the only loss you will be making is the second you sell. And for that, I'm going to refer towards the holders of Bitcoin during the 2017-2018 bull run. Many bought there at the top and had to wait several years before they saw any profit. But if you've got diamond hands and, well, get your Bitcoin around up until even this point, you still are in heavy profit. I speak for myself. Bitcoin I'm currently holding still is still valuable. I've made a profit on it by reason I bought after the 2018 bull run when the corrections had occurred. I know that because I did a trend analysis of the various Bitcoin cycles. So I know that was the best moment to buy in. It's relatively simple. Anyway, let's get back on topic here. Sad part is DeFi platforms and native tokens rely on market success. By reason, DeFi platforms tend to have their very own stablecoins. And as you guys saw here, stablecoins need to be pegged towards an asset. Up until then, everything went fine for Tether or any other stablecoin. It's only here problems started to arise. They needed to start buying in additional, having the need for more liquidity to back the platform. And seeing we're in a DeFi platform, which is everything crypto related, well, your stable coins will start having issues. They will start to depeg. By reason, well, you can't really buy in other falling assets in order to remain up above. You will get into liquidity problems, spoken fiat money wise. Token wise, those DeFi platforms are now in a very good position to amass tremendous amount of crypto to grow for the future, but they need fiat money in order to do so. So those who are going down right now really come down to bad management and not having well learned or played the market correctly. Let's continue. Naturally, little update on Celsius. In previous episodes, I talked about suspending withdrawals. Now they are in the case of a restructuring of the organization, as you can see in this article. Lays off 150 employees as crypto winter deepens. Crypto winter, it isn't really a winter. It is the nature of the beast. It is what it is. This is just a phase within the Bitcoin halving cycle, which impacts the entire crypto market. There, it comes down to it. So yeah, they give a few reasons here. While existing investors reportedly refused to bid the company, Goldman Sachs is purportedly trying to raise $2 billion to buy Celsius crypto assets at a discount. Nexo also offered to purchase them. So if Celsius goes down, they were the guys who made the saying "unbank yourself" quite popular. When these guys go down, well, probably they will be bought up. Now, as mentioned in my previous episode of Blockchain Talks, this is both good news and bad news. Good news is there's a culling going on within the cryptocurrency market. Bad projects, bad management are all being scrubbed clean. There's new amounts of crypto freed up and dumped on the market for retail to buy up to become more decentralized. However, like I highlighted here, bailout by Goldman Sachs, by Nexo, it implies the creation of monopolies. Bigger players with more fiat cash are buying up the assets, making it more centralized. So each time there's little cash flow from a company like Celsius going down, there naturally needs to occur a little cash flow in order for them to get saved or for the assets to move. And that's where you should position yourself. You need to buy in when something like this goes down. That's why we say buy the dip. When Terra Luna went down, I immediately filled up my bags when I measured where the bottom approximately was. And I made some profit. I have the assets still in my wallet, and I'm not going to move them up until the next leg up for the next Bitcoin halving and cycle, period. And even then, I probably might not sell them off because I'm the kind of guy who simply holds. Now, To continue, Celsius isn't the only one with trouble. Last week's episode did also mention Coinbase having trouble, and of course, many other DeFi and centralized exchanges, such as crypto lender Voyager Digital suspends withdrawals and deposits. Meaning this, once again, is another platform, this time associated with Three Arrows Capital, which is also another crypto-based platform, well, needing to suspend withdrawals and deposits by reason these guys went in big time during the bull run, made tremendous amounts of money, but didn't account for the cycles that occur within the crypto market with the Bitcoin halving. After each all-time high, nothing goes up forever. Each all-time high, things go down. And as we are in a bear market, or in a crap market, I might even say, well, they do not have the liquidity anymore. They need to suspend withdrawal and deposits in order to evade total failure. And crypto lender Voyager is one of those platforms associated with Three Arrows Capital, who is having the same kind of trouble. And there's this, another sign a lot of platforms, crypto-based platforms, are in the shits. You've got exchange FTX, which is a centralized exchange, also having being into trouble, whereby now BlockFi is saying, look, we reached an agreement and we're going to potentially buy FTX up. It is an exchange platform which is regularly encountered in my Crypto Bull episodes as one of those centralized exchanges for mostly altcoins and, well, shitcoins, I need to say. So once again, bad management had to lay off 20% of their staff. What is it here? Also, Citicommons firm announced receiving $250 million revolving credit facility from FTX a few weeks later. Oh yeah, so there were loans being made. So all in all, bad management, bad fundamentals. FTX is going down, and BlockFi is now stepping in to bail them out. Other piece of proof: Coinbase-backed lending platform suspends withdrawal, looking to restructure. Previous episode, I mentioned Coinbase being in quite some bad papers. Now, this continues with their lending platform called Vault, also suspending withdrawals, them trying to restructure their organization. This is a typical sign of the bear market. A lot of money has been made during the bull market. Bad decisions on the short term have been made due to greed, and this is the result. These are the kind of things which are going down. Some of them will survive by pumping in additional cash and, well, loaning against best interests, etc. But yeah, these are the things that are bound to occur. And all names you're now seeing mentioned, whereby, yeah, we've got troubles with liquidity, we have to suspend withdrawals and deposits. Those are the names you need to retain and avoid future-wise. If you have your crypto over there or money over there, withdraw and put it in a trusted exchange. Currently, I don't have any news concerning Kraken, which is still doing fine. I believe there was something about KuCoin that I heard, but yeah, it's a little bit shifty. Binance, they stopped withdrawals for a few hours' time, but seems to be growing, seems to be trustworthy, despite my very own opinion about them. I try to avoid them, so I'm going towards Bitvavo, Kraken, and others. However, Coinbase and Vault, better start withdrawing your crypto, as these guys are in need of a restructuring, have been based on bad fundamentals, which is now wreaking havoc. I know from Coinbase during the previous bull run, well, not going to say current bull run, but a few months ago during that bull run, the bull run of 2020, they were onboarding a bunch of shit coins, and decisions were being made not in the best interests of the users of the platform like they did in the past, but became more greedy. And now this is occurring and they are getting into bad papers. So this is a sign that Coinbase might be shrinking, that Coinbase might become at shit level. Naturally, I do not wish bad upon anyone, but there are signs on the wall, and to me, this is reason enough to withdraw your coins if you haven't already. Three Arrows Capital files for bankruptcy as Voyager Digital suspends withdrawal. Mentioned earlier. Where was it? No. Crypto and the Voyager attached with Three Arrows Capital. And these guys have filed for bankruptcy. So in itself, bad move. Well, bad move. Bad management. Also something which went big during the bull run of 2020, but now during the bear market, due to bad management, not making well-made decisions, are paying a hefty price, a very hefty one, by reason Chapter 15 bankruptcy. So they are broke. Suspending trading, they even make mention of it. It is typical during the bear market, especially now with DeFi. On various on various tweets on social media that I've made, I also mentioned, look, more and more companies are getting into trouble with liquidity. And once again, Crypto Potato here mentions it anew and says, look, lengthening list of companies suspending trading by reason bad fundamentals. Everything was built when assets were appreciating. Nothing was built with a bear market in mind. So that's bad management, not being well made. That's what it comes down to. Further news, European Union agrees on hard-hitting crypto regulatory framework. So they hammered out an agreement on what will become the first major regulatory framework. Challenging for crypto exchange and stablecoin issuers operating in Europe. So they are targeting stablecoins. In my opinion, stablecoins are as bad as CBDCs, central bank digital currencies. What's even worse, this is actually a very blatant move to say, look, stablecoins, back to the euro, dollar, British pound, whatever, need to leave the market by reason are CBDCs. We want them to be as them. And naturally, heavy regulations. They know who the big players are in the market. So they'll try to maintain reserves to meet any mass redemption requests. And forcing limitations by reason, they are setting the stage for introducing CBDCs. This is quite evil in my book. Protect investors. So yeah, the main excuse here is about regulation and saying, yeah, but the crypto market is wild. It's a wild west. Nothing is regulated. You can lose money very easily. Whereas I, as an educator, say you can make money easily even during this bear market, but you do not need to be a daft idiot. You need to know what you're investing in. You need to know when you are buying. That's the whole reason why I started with my Gracious Interests brand, really. In order to educate people to learn about Bitcoin cycles, how it influences the market, when to buy, when to sell, etc., etc. So, and this is them telling, yeah, but the majority of you guys are stupid, so we are now taking in the reins. We are going to regulate the market to protect you guys, but at the same time, there's cash flow going towards their own wallets, which is quite criminal, and this is the main excuse they're hanging up to. So do not be, do not step into that trap, really. That's where it comes down. And naturally, Terra Luna fiasco is just another reason to go full-on CBDC and saying, yeah, we are disturbed by stable coins, especially since the Terra ecosystem collapse. is not happy about stablecoins generally, I'm sorry, guys. That's just a lame excuse. They are taking one such event in order to push something even worse: central bank digital currencies and heavily regulating stablecoins. So yeah, there's a variety of moves being made, more and more dirty ones. So next time someone tells you, yeah, it's great they are now starting to regulate the cryptocurrency market, you have my permission to slap that bitch into his face, because he's literally captured in the BS that your governments are sharing. One of the fundamentals of crypto and Bitcoin is the more distributed and decentralized it is, the better. Not only for price and value action, but for use. Well, yeah, for use. That's basically the other thing. I can't really remember what I wanted to say. To mark, to tell this is occurring. 3AC files for bankruptcy. So should in the non-traditional the takeaway here is that, well, where it concerns DeFi, well, as mentioned in the, okay, sorry, losing my catch here. I'm going to need to look up afterwards if it has been recorded nicely. Seems there has been a little automated F up. Anyway, takeaway here is DeFi and exchanges, well, a variety of DeFi exchanges and centralized exchanges are having difficulties with their liquidity as a result of the current bear market. Now, this is actually very fertile grounds for us retailers to buy in even more Bitcoin and strengthen our crypto assets, but to other big players as well. As being mentioned here, block fee or potential FTX purchase, meaning FTX will become block fee, meaning their assets will be transferred, meaning it will not immediately impact the cryptocurrency market, but it will, as a result, strengthen block fee's position, meaning they will hold a better monopoly. And that's something to look out for by reason they will become a bigger whale, they will have a bigger share in the market and can more easily influence it. With that, I'm going to end the broadcast. I thank you all for watching. I hope this one has been done right. We'll be looking it up later on. If I notice that for more than half of the live stream, the audio has been cut, I'll probably redo it. In any case, thank you guys for watching. Hope to see you next time. Please like, subscribe, leave a comment. And with that, I'm going to say have a nice day, guys. Bye.